Nilkanth called Nand and asked him to meet at the hospital cafeteria near their office. When he arrived, Nilkanth looked visibly distressed. As he sat down, Nand immediately sensed something was wrong and asked why he had been called there. Nilkanth explained that one of his closest friends had been hospitalized the previous night. As the sole earning member of his family, his friend had no financial backup, neither sufficient savings nor any medical insurance to cover the expenses. As they spoke, a sudden commotion broke out in the hospital lobby. Moments later, his friend's wife rushed into the cafeteria, crying and calling out in panic. Alarmed, Nilkanth hurried toward her to understand what had happened, only to hear the news he had been dreading. His friend had passed away. Shaken, Nilkanth briefly returned to Nand and asked if they could meet the following week to continue their discussion. He then rushed back to support his friend's wife and assist with the formalities, while Nand remained seated in the cafeteria, silently absorbing the gravity of what had just unfolded. The following week, when they met again, Nilkanth noticed that Nand seemed lost in thought. Breaking the silence, he asked whether Nand had any medical or term insurance for himself or his family. Nand replied that he did have medical insurance, but no term insurance. Nilkanth nodded and said, "You're more exposed than you think." Puzzled, Nand asked what he meant. Nilkanth explained, "At your age, you're focused on building income, creating assets, and working toward financial freedom. But a single unexpected event can wipe out years of progress. Insurance isn't an expense, it's a risk transfer tool. You pay a small, predictable cost to protect yourself from a large, unpredictable loss." Nand responded thoughtfully, "We were never taught the importance of insurance in school. I do have medical insurance, but that's only because my employer provides it. If I leave my job, I won't have any coverage." "Do you know the different types of insurance?" Nilkanth asked. "Not really," Anne admitted. "I only know about medical insurance, since a certain amount is deducted from my salary every year." Smiling, Nilkanth said, "All right, let's break it down so you can understand it better." He continued, "Health insurance helps cover your medical expenses when you fall sick, meet with an accident, or require hospitalization. You pay a fixed amount, known as a premium, to an insurance company. In return, the insurer covers your medical costs, either partially or fully when the need arises. A typical health insurance policy covers hospitalization expenses, doctor consultations, medicines, and diagnostic tests, pre- and post-hospitalization costs, and even daycare procedures that don't require 24-hour hospitalization. It protects your savings, gives you access to better health care, and reduces financial stress during emergencies. There are a few key terms you should understand. Premium, the amount you pay to keep the policy active. Sum insured, the maximum amount the insurer will pay. Cashless treatment, where you don't have to pay up front at network hospitals. And claim, a request you make to the insurer for payment of expenses." He paused briefly before continuing. Term life insurance, on the other hand, is the most affordable and simplest form of life cover. You pay a regular premium, monthly or yearly, and if you pass away during the policy term, the insurer pays a lump sum amount, known as the sum assured, to your nominee. If you survive the term, typically no money is paid back, unless you've opted for a return of premium plan. Term insurance is essential because it safeguards your family's financial future in your absence. It helps replace lost income, ensures your loved ones can maintain their standard of living, and supports long-term goals like repaying loans or funding your children's education. Nand listened carefully, and Nilkanth added, "Many people hesitate to buy term insurance because there's no return. But that's missing the point. It's not meant for returns, it's meant for protection." He concluded, "There are other types of insurance too, like general insurance for cars, bikes, and travel, as well as personal accident insurance. But at the start of your financial journey, the two most important ones are health insurance and term life insurance.
This is just the beginning. Over time, you'll understand how to use them effectively.
Nand took a sip of his coffee, then asked quietly, "Did your friend have both medical and term insurance?" Nilkanth paused for a moment and replied softly, "No." Without another word, he stood up and walked out of the cafeteria, leaving Nand deep in thought. The next morning, Nilkanth called Nand and asked him to come to an address he had just texted. When Nand checked the location, he was surprised. It was an insurance company. Curious but trusting Nilkanth, he decided to go anyway. As he entered the lobby, he saw Nilkanth waiting with an elderly, bald man. As soon as Nand approached, Nilkanth smiled and made the introduction. "Nand, this is Rakshak," he said. "He's an experienced insurance advisor." Nilkanth then turned to Nand and continued, "You already understand the basics of insurance. Now it's time to go deeper, understand the nuances of different policies, and more importantly, the mistakes people often make while choosing them." Nand nodded, intrigued. He greeted Rakshak warmly and ordered 3 coffees for them, ready to begin the conversation. Rakshak quietly mentioned that Nilkanth had told him about the tragic incident involving one of their old mutual friends, someone who had neither medical insurance nor a term insurance policy in place. Rakshak explained to Nand that having a solid medical insurance plan and a term insurance policy is a fundamental prerequisite before building wealth. He added that other insurance products offered by companies are designed to meet specific needs and should be chosen accordingly. He continued, most people don't fail at insurance because they don't buy it. They fail because they misunderstand how to use it. Rakshak continued, "There are some of the biggest and most costly insurance mistakes I see, especially among young earners. Treating insurance as an investment. There are various types of insurance policies, such as money-back policies, ULIPs, unit-linked insurance plans, and endowment plans, that combine insurance with investment returns. However, when choosing insurance, your primary focus should always be protection, not wealth creation. There are dedicated financial products available for growing your wealth. Insurance, on the other hand, is meant to safeguard it. In simple terms, insurance should protect, not perform. It is not about generating returns. It is about ensuring that your financial life doesn't collapse due to one unforeseen event. Not letting term life insurance early. Many people tend to delay buying a term insurance policy. What they often overlook is that the earlier you buy it, the more affordable it becomes. Life is unpredictable. Waiting only increases both risk and cost. Delaying health insurance until it's needed. Many people also tend to delay buying a medical insurance policy. They wait until they are diagnosed with a health condition, by which time premiums become significantly higher, or coverage may even be denied. You should always buy a medical insurance policy when you are healthy. This not only helps you lock in lower premiums, but also allows you to complete waiting periods early, ensuring full coverage when you actually need it. Relying only on employer health insurance. In most corporate and even government jobs, employers provide health insurance coverage to their employees. However, this coverage typically ends the moment you leave the organization. When you switch jobs, there can be a gap before your new employer's policy begins, assuming they offer one at all. Since life is unpredictable, even a single day without health insurance can expose you to serious financial risk. That's why it's essential to have a personal health insurance policy alongside your employer-provided cover. Rakshak continued, choosing low coverage to save premium. With rising medical costs, higher insurance coverage naturally comes with higher premiums. To avoid paying more, many people settle for lower coverage, often encouraged by advisors who suggest cheaper policies, knowing there will be less resistance. However, this can be a costly mistake. A single hospitalization in a metro city can exhaust a low insurance coverage and still leave you paying out of pocket. It is always wiser to choose adequate coverage, even if it means paying a higher premium. Remember, most middle-class families can manage insurance premiums,
but a large hospital bill can disrupt their entire financial stability.
Neglecting policy fine print. Most people truly understand their insurance policies, especially medical insurance, only when they file a claim. That's when unexpected surprises surface, such as waiting periods, exclusions for certain illnesses, or limits on room rent. To avoid such situations, it's important to spend time reading and understanding your policy document in advance. If needed, seek guidance from an expert to fully grasp the fine print and nuances of your coverage. Not having adequate life cover. A life cover of rupees 10 to 20 lakhs is grossly insufficient for someone earning rupees 8 to 10 lakhs annually. As a rule of thumb, your life insurance cover should be at least 10 to 15 times your annual income. This ensures that in your absence, your dependents are not left financially vulnerable. An adequate life cover provides them with a financial cushion, helping them manage daily expenses, repay liabilities, and maintain their standard of living for a few years while they adjust to the loss of income. Insurance is not about replacing you. It's about replacing your income long enough for your family to regain stability. Not disclosing medical history. When purchasing an insurance policy, either directly or through an inexperienced agent, disclosure of health conditions is often overlooked, whether intentionally or unintentionally. Some people choose not to reveal existing health issues to keep the premium low, but this can lead to serious consequences. In many cases, claims are rejected later because of non-disclosure or incorrect information provided at the time of purchase. It is always essential to be completely transparent while buying a medical or term insurance policy. Full disclosure ensures that your claims are honored when you need them the most. Ignoring inflation. People often overlook the impact of inflation while planning for the future. Medical costs, in particular, are rising at an alarming rate of 10 to 15% annually. As a result, a 10 lakh rupee health insurance cover today may feel like just 5 lakh rupee in the next 10 years. To stay adequately protected, it's important to choose a policy that accounts for this reality. Look for features like restoration of the sum insured, where your coverage is reinstated after a claim within the same policy year. Also, opt for policies that offer a no-claim bonus, which increases your coverage in years when you don't make any claims. Not reviewing insurance regularly. Your income, lifestyle, and responsibilities evolve over time, but your insurance coverage often remains unchanged. This mismatch can leave you underinsured when you need protection the most. It is always advisable to review your insurance coverage every 2 to 3 years, or after major life events, such as marriage, a significant salary increase, or taking on a loan. Your insurance should grow along with your income and responsibilities, ensuring that your financial protection keeps pace with your life. Buying based on agent pressure or brand name. Many people buy insurance policies when approached by agents or when friends and relatives recommend a particular plan. In such situations, it's easy to be influenced and purchase a policy without properly evaluating other options. However, this can lead to poor decisions. Before choosing any insurance policy, you should always compare key factors, such as the claim settlement ratio, policy features, and the cost relative to the benefits offered. Insurance should never be bought emotionally. It should be a logical, well-informed decision that aligns with your needs. Skipping critical illness or disability coverage. We often think of death as the only major risk, but disability and serious illness can be just as devastating, as they can completely stop your income. That's why it's important to look beyond basic coverage. Consider adding critical illness insurance to protect against major diseases, and a personal accident coverage to safeguard against disability. Rakshad said, "A well-rounded insurance plan doesn't just protect life, it protects your ability to earn." Rakshad concluded by saying that these were some of the most common mistakes people make, and the key guidelines they should remember while choosing any insurance policy. Nand felt overwhelmed, but in a good way. The depth of knowledge and clarity Rakshad shared had completely changed his perspective on insurance. Just then, Nand received a call from his boss asking him to come to the office immediately.
The senior management was visiting that day, impressed by the idea of introducing financial literacy content, and wanted Nand to present everything he had learned so far. Nand quickly said goodbye to Rakshak and Nilkanth. Before leaving, he asked Rakshak if he could reach out to him in case he had any doubts about insurance. Rakshak smiled and agreed. With a sense of purpose and a head full of ideas, Nand left for the office.